This is a story about what we pay for civilized society. That's how Oliver Wendell Holmes described taxes, something we all pretty much recognize we need, but that none of us enjoys paying. And so we end up in an endless back and forth about whether we're paying enough, whether we're paying too much, and whether everyone is paying their fair share.
A subject that's very close to my heart and close to your wallets, that old jalopy of our tax system.
Some say my tax plan is too big. Others say it's too small.
Send me these tax reforms and I will sign them right away.
In this act, we have officially made the Trump tax cuts permanent.
The debate's been raging since the time of the Gilded Age over 100 years ago, when a constitutional amendment was needed to have any U.S. federal income tax at all.
The introduction of the income tax in this country and its sort of history, which I've been interested in of recent, you can kind of trace its roots back to concerns about inequality in the first Gilded Age. You know, concerns that there was wealth that was being concentrated in these American oligarchs.
Natasha Sarin is a law professor at Yale, where she co-founded the Budget Lab.
It was exactly in response to the needs of the fisc to finance itself and concerns about inequality and its rapid growth in society.
From the outset, the federal income tax was designed to do two things: make sure the government had the money it needed and address extreme inequality in income and wealth. Flash forward to today, and the federal government certainly does not collect nearly the amount that it seeks to spend each year. The Congressional Budget Office now projects federal deficits growing from $1.9 trillion this fiscal year to $3.1 trillion in 2036.
So we have a terrible fiscal situation.
Steve Ratner is chairman and CEO of Willett Advisors, which invests the personal and philanthropic funds of Bloomberg founder and majority shareholder Michael Bloomberg.
The only way we're really going to solve it is partly by raising revenue. We're not going to cut spending. There's no political appetite to do it. I don't even think it would be economically or socially wise. So yeah, taxes have to go up. The second part of it is the question of who should pay the taxes and is the current system fair? And what you see going on, including in this California referendum that they're trying to get through, is a deep perception, which I share, in this country that the tax system is not fair, that the wealthy are simply not paying their share. One simple example is capital gains taxes. The current capital gains tax rate is 23.8%, as I'm sure you well know. From the late 60s till the late 90s, the capital gains rate was somewhere between 28 and 35%. And yet, so it's lower now than it was then. I'm not sure what the argument for that is, given that government is being asked to do more and more. The problem that the California referendum is pointed at, which is a tough one to solve, is the problem of unrealized capital gains. That you have people like Elon Musk, Mark Zuckerberg, Jeff Bezos, pick your near trillionaire.
Charging less in taxes for income off of capital gains, as opposed to income off of labor, is based, at least in part, on the idea that it's not fair to tax income twice.
Income that accrues to sort of owners of stakes in corporations, let's say, is taxed at two levels. It's taxed when the corporate tax rate is coming in and taxing the corporate revenues that have accumulated to a company, and it's taxed when those dollars are paid out, for example, in the form of dividends to shareholders.
But it's one thing to say we shouldn't be taxed twice on our income. It's another to say we should never be taxed on some gains at all.
There has been a dramatic uptick in the share of that type of capital income that's really never taxed by the tax system at all, because it's held by individuals and then passed down to their heirs, such that when it is passed down, any tax liability that accumulated in your or I's lifetime is actually erased from the perspective of the tax system. And that, potential for erasure, if you look at the top 1% of distribution, about 40% of their wealth. So a very significant amount of what Elon Musk or Jeff Bezos has in terms of what makes them have these staggering amounts, hundreds of billions of dollars, trillions of dollars in wealth, is exactly in those unrealized assets.
That way around ever paying taxes on gains on investments is called stepped-up basis, where the value of an asset is deemed to be what it's worth when inherited, even if it's gained enormously in value while being held by the one passing it down to the heirs. which means that trillions of dollars worth of assets may forever be outside the reach of Uncle Sam. And what's more, the wealthy owner of the investment can enjoy the benefits without selling and paying taxes by simply borrowing against the asset and pledging it as collateral.
If we take people at the top, what they have the capacity to do that regular people, frankly, don't have the capacity to do is say, instead of consuming based on my wages or something, I'm going to have a loan from a bank, let's say, and as collateral for that loan, I will hand them my stake in my business. And then they'll hand me some money, and I will consume out of what I have borrowed from the bank. The fisc never hits, the tax system never hits this activity in any way. So essentially, I am being able to consume out of pre-tax income, and that advantages me relative to someone who is not being able to get access to those same loans to be able to finance their consumption.
There's no real doubt that the current tax system can benefit the very wealthy, but some say this is the wrong focus. It's not whether some people end up with much, much more than others. What matters is how they got there.
Do you think that the most wealthy in the American society pay their fair share of taxes?
I think that anytime you're thinking about whether anybody's paying a fair share or redistributing anything in accordance with fairness, it's a mistake to think that we would know the answer to that question by looking at the end output, by looking at the total result at the end of how it was distributed.
Jessica Flanagan is professor of leadership studies at the University of Richmond.
And if they're investing it or how they're using it, whether it's a fair outcome for them to be taxed or not. And so when people say, oh, this person's not paying their fair share, I think a lot of times they think that there's some end state of fairness where we'll know, oh, this is the correct distribution.
What's more, Professor Flanagan takes issue with the idea of changing the tax system to deter the investments the very wealthy are making.
If you care about the well-being of everybody in the society, but especially the worst off, isn't how the pie is distributed, but how much pie there is, how big the pie is. And so in some cases, if you're very progressive in your tax system, the highly regulated economy, we see that that's going to shrink the size of the pie. And that's going to mean that there's less up for distribution for everybody in the society. And everybody's missing out on the benefits from economic growth. And so I think we should be wary about increasing the progressivity of taxation for that reason, because you really don't want to mess with economic growth. That money is already doing work for the public good by being invested in the market. And so taking that money out and putting it into the government, I think would be, in a lot of cases, a much less efficient allocation of resources, because let's just think about what the government is spending the money on. A very inefficient healthcare system, a basic income for older people. So we fixate on these people as if taxing them will solve all of our economic problems. It wouldn't. There's just not enough.
But are there specific things that could be done to change the current tax system to raise more revenue and reduce some of the national deficit and debt, and not take away the incentives for hard work and innovation?
There's both revenue and there's the perception of fairness here. There are 3 or 4 things that I would do if I could wave my magic wand. I would raise the capital gains rate, maybe not all the way to the 37% of ordinary income, because there have been studies that suggest if you raise it too much, you actually lose revenue, because people don't sell things because they don't want to pay the taxes. I would eliminate the step up in basis at death, whereby people can pass this stuff on and pay their estate taxes, but not pay any capital gains taxes on what was made. I would make interest used to borrow against stock like that not deductible. I would eliminate the carried interest special tax loophole. Not huge amounts of revenue, but there's such a perception that the rich get away with stuff out there, and some accuracy to that perception.
I have a set of proposals with my co-author, Kim Klossing, that don't engage with some of the more novel tools like wealth taxes or the mark-to-market taxation of capital gains, but instead say, if you do the more sort of traditional ideas that have been in this space, things like eliminating the preference for capital income that is passed to heirs by getting rid of stepped up basis and doing realization at death and increasing capital gains rates slightly, you are able to raise something like $400 billion over the course of the next decade. And I think there is deep logic to that. In some sense, I think the idea that we should be thinking about tax tools that allow us to tax. People often say, or I often say, that we should have a tax system that taxes Paris Hilton, not Conrad Hilton. You know, so thinking about tools for like inheritance taxes that can be relatively simply administered and levied to be able to do better about encouraging not just the taxation of capital income at the top, but also the transfer during one's lifetime of capital to its most productive use.
Whatever the better system might be for taxation, it comes back to that basic question of what we pay for a civilized society and what makes it civilized. Is it that people are roughly equal? Or is the real challenge making sure that the least fortunate have enough?
As a society, would we be better off with less inequality? All other things being equal, recognizing all things are never equal. But that in and of itself, is that a cost for our society in having extreme inequality?
That's a great question. There's a philosopher that I love who recently died, Harry Frankfurt, and he talks about something called the doctrine of sufficiency. And when he's talking about the doctrine of sufficiency, he says, it's very easy to point to a distribution and to say, oh, look, that distribution's very unequal, and to think that there's a kind of problem there. But most people, when they're looking at inequality, they think there's a moral problem there. The real thing that they're tracking is that some people don't have enough. And if we focused on making sure that everyone who doesn't have enough has enough, then the sufficientarians and the egalitarians will walk that path together for a long time.
That does it for us here at